Oil prices rose to their highest since November after Saudi Arabia and Russia extended their voluntary supply cuts, worrying investors about potential shortages during peak winter demand. International benchmark Brent crude rose to more than $90 a barrel, while US West Texas Intermediate settled at almost $87 a barrel, also a 10-month high. Saudi Arabia is extending its cut of 1 million barrels per day until the end of the year, while Russia will continue to reduce exports by 300,000 barrels per day. Riyadh first applied the reduction in July and has since extended it on a monthly basis. The cuts add to 1.6 million barrels per day of other voluntary output declines that some OPEC members have put in place until the end of 2024. Let's get more on this now with Naeem Aslam in London. He's Chief Investment Officer at Zay Capital Markets. Naeem, thank you for joining us this morning. Now, why is this moving market so much? Were investors expecting these cuts?
Sure, thanks for having me as always. I think to a larger extent, investors were anticipating that yet there is a greater chance, for these particular cuts to happen again. Why? Because I think OPEC plus nations, they are not really interested in curtailing supply. It is in their interest to keep the prices where they are. I think even now the anticipation is that, okay, where are we going to go from here onwards? Will there be another supply cut? And then what we see in terms of the price action, I think speculators still believe that this is not the end, the voluntary supply cut. This is just not the end. I think there could be a further cuts down the line as well. But for now, in terms of the price action, I think what traders are looking at is that where the prices are going to go. Currently, we are in the 90 handle, as you correctly mentioned. We think still the $100 price level, that is a strong resistance. Price may flirt with that price level, but I think it is unlikely under the current circumstances for prices to go above that price mark.
Right, now with these rising prices, are investors right in their concerns of a possible US recession, or is a so-called soft landing still possible?
Well, look, I think soft landing is very much on the table among investors and traders. That is the base case scenario for them. But of course, you are right in saying that if prices continue to remain where they are, or if they remain anchored in place, there is a threat that inflation trend could change its direction. Inflation has been trending to the downside, as we all know, since the beginning of this particular year. We've seen a lot of improvement, but the most recent readings when it comes to US inflation, it has begun to worry some investors. Now investors think, okay, what does that mean if oil prices continue to trade between $90 to $95 or anything above $85? So there is a concern, and I think that concern is also lingering among the Federal Reserve members as well, whose monetary policy is very much going to underpinning where the US economy is going to be going from here.
Right, Naeem Aslam there in London. Thank you as always.
Thank you.
Now to other top business stories from around the world. ARM has unveiled the target price range and valuation for what would be the biggest initial public offering since 2021. The British chip designer could be valued at as much as $52.3 billion when it starts trading on the Nasdaq later this month. The company was taken private in 2016 following its $32 billion takeover by Japanese conglomerate SoftBank. Shares in Manchester United have fallen by 18%. The most in its 11 years as a publicly traded company. That's after reports that the club's owners, the Glazer family, would be taking the club off the market after failing to receive offers matching their asking price. The share price fall reduced Manchester United's stock market valuation by around $700 million. And Saudi Telecom is taking a nearly 10% stake in Spain's Telefonica for $2.2 billion in a move to become the Spanish telecom giant's top shareholder. Saudi Telecom said in a statement that it already has almost 5% of Telefonica's shares and wants to lift its stake to 9.9% if approved by regulators. The transaction requires approval from the Spanish government.